All right, good morning, guys. Good morning, BD. Good morning, Isaac. I think everyone's been here before, but in case you are new, welcome to this Tradingology for February 2nd. And I will have a new link out for Thursday. I didn't get a chance to refresh it. Usually we do fresh links for the Zoom trading rooms each month. So Thursday there will be a new one. Look for that. I didn't get a chance to update it for this week. And as always, Dave, we have here joining us now. So welcome, Dave.
Good morning, everybody.
Everyone's curious about, let me grab the spreadsheet here just in case you missed it. We do have a bull trap set up here, as market timer was calling out. Multiple, pipelines fully red, flows dropped a little bit for one day, but we're above 100%. So we're looking for that bull trap. And I was just noticing, looking at the YM here, we're running out of steam on the SM price signals as we're hitting a person's pivot level. So this could all be playing into it. And it looks like the NQ has already started to turn down. And as we have talked about previous weeks, RTY sometimes is the leading indicator with the Russell 2000 dropping before the rest of the market. So that could be pointing to our potential drop here in the gap.
Absolutely. Interesting. Yeah, I had a target of 3830 on the S&P. I had an alert set up weeks ago, and we hit, I believe that this is on the cash index. So the high today was 3835.
Yeah, it looks like we're at 3830 right now on the SPX.
Yep.
So yeah, it's right on there. I was also noticing I squeezed in a few more days here just to get a look at, since we've kind of had this topping pattern where we're kind of rounding over potentially. And looking at the Dow Jones here, as I move over here, we were in that little channel up that we broke it. We're currently up in it, but if I draw just a quick line, I haven't even done this yet, but just to throw it on what my eyes kind of see in here. If we have this pattern here, a little trend line that I can't click on the dot apparently.
There you go.
We might be right at it there if we're going to hit some resistance from these previous highs that we've had. And the other thing that I did notice this morning, if you guys haven't watched this, and the SD on the NASDAQ had a downward print of 652 on a 10-minute chart.
Yep, notice that. Big institutional sell orders right there did not go the other side, so they're not offset. That's a pretty big sell order. Now, the market makers who absorb those orders have the choice of either putting them right into the market or kind of spreading them out over the day. And it looks like they're kind of spreading them out because right at that time, the NASDAQ futures were up 144, and I think they went up to about 188, and they're up 177 now. So it looks like they're going to try to slowly get those orders out into the marketplace on the sell side.
Which makes sense for just a flat line on the volume that on the internals that you guys know we always watch. So this is just going on here. Major separation once again. Big drop in volatility for the VXX with the gap down today. But yeah, we opened up pretty high, close to 1700 give or take. But then now it's just hovering around 14. We'll see if that holds steady or if that continues to drop.
Yeah, and the IWM was down very, very sharply. I was actually long the ES futures and short the Russell 2000 futures, and the spread was really tight. It was like, it wasn't even, I think it was maybe 12.12%, and it spread out to 1%.
So you did a nice ESRTY vol arb trade. That sounds awesome.
Yes, that's exactly what I did. And it worked out beautiful this morning. I made money on both sides.
That's one thing that we should mention. You guys have a lot of tools in your arsenal. Just because the target hunter is working like money doesn't mean the other ones still don't. It all depends on what we've said. And I think I said it again recently is, use which one fits your style. Volatility arbitrage is a great trade. You can set it up so you can watch two instruments at the same time at one chart. We go over, covered all that. So here's what Dave's talking about there is he had a trade on the ES and a trade on the RTY. And it just so happened that it worked on both sides. Usually you only want one side to work to be profitable. When they both work, it's a home run.
Yeah. It was a very, very, very nice trade. Interestingly enough, I used the VWAP to time the entry. Same as the target hunter.
See, now you start putting all the tools together.
Yep.
Very interesting. I like it, Dave. And now we're seeing a red arrow and some negative for the first time since the open on the YM here. So will that continue down or will the bulls come back in? And it looks like, according to your latest weather, Dave, I was going to check on you to make sure you're all right. The bull's covered in snow right now.
Oh, New York City got hit really hard. I think they got 10, 15 inches. We didn't, we got maybe 4 or 5. So it wasn't really a big deal because we're so far upstate New York, between Syracuse and Albany, we didn't really get hit that hard.
I wasn't sure how far it tracked up to you.
Yeah, no, it didn't. In fact, I was looking at the weather for the last 24 hours and they said that we weren't going to get anything, but it shifted, I guess, at the last minute.
Andre's got a question. You can throw that in the Slack channel, Andre, for VXX. We'll keep it in there.
Yeah, so VXX, let's take a look at the chart. I mean, we can kind of get a real quick eyeball of it, but it's down sharply today, but it's right back down to the to the Darvas box. That's all I'm going to say about that. Everything else got to go into the VXX channel.
There you go.
Top secret.
Put that back to my regular restore.
Just FYI, I bought some of the UVXY this morning at 12 bucks. Not much, just a little bit.
Just little nibbles.
Just a little nibble. Yeah. Seriously, very, very small. I bought 10 shares, which is 120 bucks.
Let's see what else. Oh, the other one that we always like watching, of course, is our Dixie's doing what it's supposed to do.
Yeah, we broke through that 91. We were talking about that and chatting yesterday, and it did break through that 91 level, and it's holding pretty steady here. Once it broke through, it popped up against it, a number of times and kind of butted its head, but it finally broke through. So, I mean, if you look at that pattern, it kind of looks like a inverse head and shoulders. You got a little, you got that left shoulder right there. You got the head in the middle, and you got a little right shoulder over there on the right there. So, we'll see how this plays out. And now we've broken through the neckline. That neckline was right at 91. We don't see any resistance until we get up to about 92 something. I think it's right around 92 up there. There's a low right around November 9th. That support level could be resistant. So right around 92.15. Yep.
But all slow cooking. That's what we want to see. It's working in the favor.
Yeah, I mean, it looks pretty good so far. Kind of happy with the trade. So, yep, I do like it.
Nothing major on the calendar today. Today only had one economic optimism that was slightly positive. They were forecasting a 51 and they got a 51.9 for that one, but it looks like it's a low impact expected, but they've been changing these impacts. So I don't know if I trust that anymore. Even crude oil, they have it low impact. And we know that's never low impact.
Yeah.
So I have them all turned on, but not a lot of newsworthy things in the calendar. Later this week, we'll have a few more things coming out. And just to look at tops, they still can't figure out what they want to do with the stimulus. We know how much that's driven the markets recently, whether it's up or down. The president came out with the 1.9. Now they're arguing about it. Now they're saying, are we going to reduce some? Are we going to add some? They have no idea. Typical politicians. Everyone's talking about GME, now that they're done with it. I'll take a quick peek.
Yeah, it's at 110. The price is right there. I think it's a live update.
That's delayed for sure because I got $85 on my live feed.
Oh, really? Yes.
GME's dropping right now to 87.
It is delayed then. So I think nobody could predict the top of that, but everybody knew it was going to happen.
Which is so sad because there's so much people could have done with all of that money.
Yeah.
Instead of saying that it's not about the money, well, at least make it about something that you can do with the money.
Well, yeah. I mean, there was a guy who was on Benzinga Nation. He was being interviewed and he said he's never going to sell And that was when it was up around 350. And I guess he showed his statements to the interviewer, and the statements indicated that he was up a lot of money. I don't know how much it was. They didn't never revealed it, but the interviewer was a little frustrated and said, "Hey, look, you could do something good with that money. You could start a charity. You could give it away to charity. You could do something. If you're just going to hold it until it goes to zero, what's the use? What's the point?"
Because that hedge fund, yeah, maybe they rolled over and they got more money. They're gonna come out of it just like they got, banks got bailed out.
Well, here's a really important point that you guys really need to understand this if you're not aware of what happens in market manipulation. It's not just it's not Reddit, it's not Wall Street beats. Wall Street beats were triggered by what appears to be other hedge fund traders, prop traders, who knew they started to sow the seeds in the forum that, hey, look, this is a great target because, it's like 140% short interest. That took fire. I mean, it's just like a fire in a dry patch of land like they have in California, and it starts a small fire and all of a sudden it spreads all over the place. Hedge funds profited enormously from that rise. They were already in the trade. You can't believe the stuff that they put into these forums. You don't know who they are. They know at least one person who was egging everybody on and trying to get them to buy GME was a registered investment advisor for one of the brokerages. And so those traders so the whole movement really is made more money probably for the brokers and hedge funds than anybody. And a lot of the retail traders the worst investment advice I ever heard was all of these people on the forum saying, hold the line, like it's something that they're in a battle against somebody that they can see. They can't. They don't know who these people are. It's sad, really. It's very, very sad.
Yeah, I was going to ask you about that because I was reading a few articles. I don't remember where they were. There's been so much about GME recently was using Wall Street bets as like the scapegoat. And it's like, do you really think these retail traders could actually move the market? There's always that. It's kind of like, they're using them as a scapegoat. It's like, okay, yeah, there's 2 million people in there, but there's still a whole pile of more control in other places, which I think goes to what you're talking about there, right? If one hedge fund, like I heard another guy talk about, yeah, they're all cannibals. All these guys are. That's in the investment space. If they see one person down, they're gonna swarm, right? They're like sharks in the water. They smell blood. They're all there to take it. So they learned about Mellon's squeeze and they took advantage of it. And then like maybe someone tipped off the other guys, made it look like them. That was a very interesting way to manipulate that for sure. On top of just the market manipulation with orders under the covers. Once you start socially manipulating people and then they think that they're actually the ones that are doing this, that's very powerful.
That is, because it gives the retail trader a feeling of power that they can actually move the market. But I guarantee you, retail investors in that forum did not move the market. It's really a form of espionage. I mean, they had spies and they had people in there from hedge funds and brokerage firms that were just like tweaking everybody and triggering them.
Well, and it's wide open too.
This,
If they had some control, like I jumped in there just to see what the hullabaloo was all about. It's like, what are these guys talking about? So it was a free open door, so anyone can be there. So just because they said they had a ton of people doesn't mean they were like vetted only. Hey, we're going to do this group of work. Yeah, it's a great open forum. It's fantastic, but there was no security on it. There was no things to do to be able to be in there. Requirements.
Yeah, none at all. I joined. I mean, it was no big deal. I mean, it's just like
the other part that
they can get in, and you can make up any username you want.
Yeah, I think I just picked some random one. They're like, do you want to keep this forever? I'm like, I'll work on that later. Funny how their forum works. The other part that's ridiculous is they're trying to say, now they want to go after silver, right? So that's they're like, oh, you think you can manipulate the market? Try and take on the silver short squeeze. And everyone's saying all these news outlets are reporting oh, they're going after silver, here they go. And they weren't. Like in there, they were there was like
Yeah.
maybe 3 people saying, look at what's going on over here. Because everyone talks about, the Hunt brothers and the silver short squeeze from the past and how they got blamed for it. It's like the Hunt brothers all over again. They're
Yeah.
blaming them, and it wasn't actually them. They were just the tip of the spear, if you want to call it that, or that's probably a bad analogy, but
They were the fall guys, though. I mean, they're the ones that ended up getting caught and just kind of taking the blame for it. But I think I mean, it seems like the really, really sharp other hedge funds. I mean, there's thousands of hedge funds, and the ones they're hiding in the forums, trying to get everybody to get in on this thing. And hopefully, I mean, this one kid that was being interviewed, he must have been around 21, 22. I don't know if I mentioned it last week. I mentioned it to somebody, but anyway, he says it's the principle of the thing. It's not about the money. That's yeah, right.
yeah, I'm looking at these screenshots of over $1 million. Don't tell me it's not about the money. You can change a lot of people's lives with that kind of funds.
Yeah, start a charity. Start a fund that pays lawyers, SEC lawyers, to go after these hedge funds that are doing these naked shorts. Now, there's another issue about the naked shorts, though, that's really interesting. When you short a stock, you have to locate the shares in order to borrow them, and the broker does that for you. The problem is the broker can't reveal that you're shorting the stock, and so that never goes on the ticket saying that you're short. You want to short the stock. That's why you want to borrow it. And so that borrowed trade, you never know how many times those same shares are being borrowed. That's how they can get to 130, 140%, because the internal systems cannot ticket that borrowed stock as a short sale. And so they could, I mean, if you got 100 shares short of something, they could sell it short 10,000 times, the same 100 shares.
What's a valid reason for the broker borrowing my stock to someone else?
That's the only way you can short a stock. So,
right,
the other thing is, if you borrow it, well, you could say that it was sold short, and I mean, you wouldn't know that your stock was borrowed. In other words,
sure.
let's say you had 100 shares, you would not know if that stock was borrowed. And one of the pieces of advice that was in the Wall Street Bets forum that retail traders just don't know is that you can actually call your broker and tell them that you don't want your shares, whatever you're long, to be borrowed.
Yeah, don't make them available to the short pool, basically.
Don't make them available. And that's only the kind of information that hedge funds and people who really know what they're doing are privy to. It might be out on the internet and stuff like that, but still, most of these guys are not that sophisticated. They're really, really sharp guys, and they know how to trade, but that's the kind of stuff that was constantly mentioned is don't, call your broker, don't let your shares be borrowed.
Yeah, I did read more than one person that had held the stock forever, whether they were GameStop employees or whoever they were, that just had, hey, we own the stock at $5-10, whatever it was, for a year now. They go into their account and it was sold that was not available. They're like, I've owned this for a year and I want to sell it now, and it's claiming it's not even there. That's the one thing that I hope comes out of this is fix or make some rules about no over 100% float. That's ridiculous in the first place, even to have that ability. I know we live in this world of fractional everything, right? Fractional dollars, fractional banking, no reserves, blah, blah, blah. Well, that was a great interview that you sent out that I watched. One guy watched another interview from Bazinga.
Yes.
And it shows just the fragility in the market because they have such low margin requirements for the clearinghouses that run the underlying entire system. If that falls apart, it's like, yeah, I can't even trade. Like, I haven't looked today. I even had the problem in my TDA account where it said closing only. I'm like, I'm not even doing anything.
Yeah.
What's going on here? So yeah, this is affecting just everyone trying to do regular trade on the market. So once that breaks, then we got nothing.
Well, what happened was too is the DTCC, who clears about 95% of all the trades and stocks, said basically, hey, look, we're not going to fund you guys anymore because they have to float the 2-day settlement period. They said, we're not doing that anymore, and so nobody could borrow money. So nobody could margin anything.
Yeah.
And a lot of that's why the stock list of those that you couldn't trade anymore kept growing and growing, and they required 100% margin, 100% of cash, to buy it.
Which feels like we should go back to non-fractional banking in the first place. That's a whole other discussion, though.
Yeah, that's for sure.
We'll save that for another day.
Yeah.
BD says he's closed his TD accounts looking for a new firm. Did you get hit too, BD? What happened on your side? Out of curiosity, you don't have to share if you don't want to, of course. And I will edit anything that you don't want in there.
It hit most of the firms.
They limited your trading, and I'm assuming you probably weren't trying to be like crazy things, just normal everyday, like the same thing I did, where it turned into closing only, right? Is that what happened to you? I'd be curious to find out if there's any broker that this wasn't affected. Like, you name all the list of them. Is there anybody that stayed open for everything? I'd be curious if we can find that out.
Yeah,
Obviously, we know TDA was affected, and we know
Interactive Brokers was E-Trade. Schwab, I think, is the only one that maybe did not limit. Not quite
Fidelity, he said he heard didn't limit, but not verified. I've heard a lot of people were going to Fidelity. I did see that in the forum where because Robinhood stopped everything, right? It was like a train wreck. You heard the brakes over the air. And then yes, that's good to know, just out of curiosity, because I want to have my funds in a broker where they're not going to halt trading because of something else is going on that doesn't even affect what I'm doing. Then now we're suddenly collateral damage. So if you guys hear about anything after fact, let us know or keep us all informed, and we'll all help each other out.
I did hear that Robinhood and Tasty Works also is cleared through the same Citadel firm. So
I heard it mention that too. Yeah, that's why I never saw anything on my Tasty account, but I wasn't trying to do any super active trades. I did. I had no problems last week closing on my Sundial stuff, and that was actively going on. So, but I did hear that Tasty was, they got used the same clearinghouse, so I assume they might have had similar issues, but I didn't see any on mine, or I didn't see any halting notification. Or I did see the halts, but that was because of the volatility in the stock, which is normal to have the limit up and downs for the pause. That wasn't an all trading halted, so that was a normal operation.
Yeah, Apex clears. That's right. Yeah, that's absolutely right. Yeah, and they were doing it for a number of different brokers. I didn't hear about Fidelity. Does Fidelity have a trading platform?
I think they clear their own, don't they?
No. I mean, like
just a trading platform.
Yeah, just a trading platform.
That I don't know. It might just be web based only. I assume. I haven't personally used them, so I'd have to look into it unless someone here knows.
Yeah. And Schwab, I wonder if Schwab has a trading platform.
Yep. Yeah, they have their, I think it's called like Street Smart or something like that. So they do have a platform. Mm-hmm. Good advice. Keep good food for thought. So with that, we'll probably get close to wrapping it up here. We're just about hitting the top of the hour. So appreciate you guys coming out once again. As you guys always know, hit us up on the email if you got questions. And we will be back here on Thursday. Any final thoughts? Anything that we missed for you, Dave?
Just watching commodities here. We've got corn, wheat, soybean, cane, Joe, seed. Seed is the only one up. Cane's up a little bit, but all the rest are down. Watch silver. Silver is interesting. I don't think it has nothing to do with the Wall Street bets. But I kind of do like the price action a little bit. We'll kind of see what happens with silver. But I definitely think it's underpriced. I think a lot of people are considering it to be and still a precious metal, but it still has tremendous industrial uses, especially if EVs become more everybody's pushing EVs and green energy. Well, all of those solar panels, all of the batteries, all of the components for EVs need a little bit of silver. And so I think that's going to continue to be an interesting story here. The gold silver ratio, which we were short when it was up around 120, is now at 68. And I think it's going to go lower. I did do a little trade on it the other day and I made some money, but I think silver's going to catch up to gold a little bit more, and we'll probably see that ratio decline. That's all I got.
Right on. with that, we'll probably wrap her, and we'll throw in a couple answers to the questions in the channels. Andre saying, how would you get involved in silver? I'd be careful if you're going to do the futures. If you want to do more of a long-term hold, see if you can do some of the minor stocks maybe for silver. What would you think there, Dave?
I would go AG, PAAS, those two, Majestic and the Pan American Silver companies, maybe even some of the minor silver producers out of Canada. I don't have any names for that. But that's the way I would play it. I don't know if I'd go with silver directly unless you want to buy physical. Obviously, that's a great, I think that's great. BD says Mike Malone's waiting for the ratio to drop to 20. Historically, the average is like 16 or 11. So in that area, definitely. I also think it's going to drop significantly. Yeah.
One thing to watch for there too, Andre, about the futures, though, why I say that too, is if things do go crazy, just like it did, we saw with margins in the stock market, there's nothing to stop them rewriting the rules and you saying you need 100% margin on your silver futures and they close out your positions.
Yeah.
So why it's better to have it in like an ETF where you're not margined and you're just in a cash account. That way you don't have any margin call risk.
Right. Yeah, definitely.
Because something happens and they change the rules and it hurts the little guy. It doesn't hurt the big guys.
Always.
All right, guys. Well, we'll probably wrap her up here and see you back on Thursday. Last thoughts on the bull trap. They're not 100%. The day's not over yet. We saw definitely a pause here. Where's my indexes? Is it underneath? It's not underneath. I lost my chart. Let me see if I can find it for the last second. There it is. And we're just starting to get a turn down, looks like, on the oscillator here, just like we saw come on, if the chart agrees with me. If this starts to continue down, we could see the downturn, but yeah, we'll see where that ends up with the deal there. But keep an eye out. Look, we have strong hurting as well as strong 26 on the supply demand index. So that's indicating institutional buying right now, which is propping it up, which we see in the internals. So if these internals stay up, yeah, the bull trap probably won't play out. If they drop off, then I would look for a lower move it throughout the day.
Yep, we'll keep an eye on it. Thanks, everybody. We'll see you guys.
Have a good day.
All right.